Today, we're going to talk about using life insurance for a living. And if you don't know how, listen up. So, we have two main types of life insurance. We have temporary coverage and we have permanent coverage. Within that permanent coverage group, there are policies that allows us to grow fund value. This is where we can stash cash. And this element, this component is what allows us to use life insurance for a living. And how can we use it? Of course, the basic and most important feature in my mind of life insurance is being able to protect our family if something happens and we are not there anymore to provide for them. Life insurance will step in and take care of them for us. The other element, which is what can help us to build that fund value and have it grow for us, tax exempt. In the future, once we've amassed a certain amount of fund value, we can leverage that fund value for cash, right? Easy access to cash. And we can use this cash to pursue investment opportunities, fund our lifestyle, fund our retirement. And I'm going to explain how this works. So just to point out though, if you are someone who is going to ask how much this is going to cost, this might not be for you. You might want to look at temporary coverage or other permanent options that don't have cash value if you're looking to minimize on cost. But if you are someone who is going to ask me, how can I use this to its fullest potential? Well, continue listening. This is for you. So how does it work? When you get a permanent policy that allows you to build cash value, the goal is to overfund this policy. And by overfunding, I mean put more than what it costs to carry the policy. Use it to the maximum potential. With your coverage, with your insurance coverage, it gives you room for tax-exempt investing. So it might depend on the policy, how it's structured, how much room you have. But if you are able to maximize the room, the tax-exempt room, by overfunding your policy, putting more than is required to carry the policy, cover the cost of insurance, you will be able to build fund value and cash value inside of this policy. Within your insurance contract, there is a clause or clauses that allow you to access or leverage that cash value in the future. And there are multiple ways to do so with different tax consequences and impact to your policy itself. The three options to use it are withdrawal, policy loans, and collateral loans. My two favorites, of course, are the policy loan and the collateral loans. But I'll go over all three options. Once you have cash value inside of your policy, you might be able in the future to withdraw a portion of that cash value. With taxes, and withdrawal can impact your overall death benefit. The other two options, a policy loan, again, part of your contract, if you were to want to access your policy loan, funds from your policy, you can leverage it for a policy loan, which is a loan directly from the insurer. This is, again, it's embedded inside of most insurance contracts. It's an automatic, no income verification, no qualifications necessary. It's a matter of telling them where you want the money deposited. You will be charged interest because, again, you're using the cash value or the fund value as collateral to access a policy loan. Policy loans are typically unstructured loans, so you are able to dictate the repayment terms. The interest rates are typically favorable to market as well. And again, it is a contractual obligation, so easy access to cash that doesn't impact your credit score nor show up on your credit report. What can you use these funds to do? You can use it to do whatever you want. You could use it as a down payment on your first home, or to purchase an investment property, or as an option to finance a car purchase, or to fund your vacation instead of putting it on your credit card. And then you'd be able to repay this loan on your terms at a significantly lower interest rate, especially when compared to a credit card. A collateral loan is when you present your policy to a third-party institution and use it as security for a loan from that third-party financial institution. Imagine, it's like having equity in your home that you're able to leverage. You've created an asset that you can use throughout your life to help improve the quality of life, to help you pursue opportunities faster with flexibility. It also is a backup, right? It's like a reserve that you can use to provide a buffer should life get tough, right? For example, if you had cash value inside of your policy and you got laid off, which is happening a lot right now, you could leverage your policy for a policy loan to help you through that period of unemployment until you found another job, and then you could repay that policy. Then imagine that, to have that kind of a flexibility, to have that kind of financial control over your future. When it comes to the using of the fund, as I said, you could use it to pursue an opportunity, an investment opportunity. You could use it to support your lifestyle. And this is typically done especially to supplement retirement income. For example, when you get to the age of retirement, 65, 67, and you've been carrying your policy for decades, building up that cash value, you now have an asset that you can leverage to fund or to help fund your retirement by using it as a security for a collateral loan. Imagine that. Why is this a good tool to use? One, it's if you get a collateral loan, the funds coming to you are loan proceeds. Loan proceeds are not taxable cash flows. So you could be funding your lifestyle using your policy to complement whatever benefits you get from the government, whatever benefits you get from your employer, or whatever investments you have that might be coming to you. Those other options potentially are taxable, but you'll have this option to fund your lifestyle that triggers no taxes. And the good thing about it, you wouldn't need to worry about repayment, because if you were to use your policy to fund your retirement, what would happen at the time of passing, because you would have assigned that policy to the financial institution, the insurance company is aware of that assignment, they would settle the loan that you've been enjoying for 10, 20, or maybe even 30 years from your death benefit proceeds. And the net would then go to your family to help them with whatever responsibilities that they have because of your passing, whether it be paying off your final expenses, paying your final tax bill, and even better, you'd be able to leave a legacy for your kids, a charity, or whomever you would want to name as a beneficiary. And also remember, these funds are paid out tax-free. So a policy that you can use throughout your life. And by overfunding your policy, you create an asset. And that asset, that fund value, grows tax exempt. It provides you with multiple ways to access, whether by withdrawal, whether using a policy loan, or whether by collateral loan. You can access this cash. And guess what? When you access this cash, there is no strenuous income verification, no credit checks, and you have access to this quickly and easily and normally at favorable rates. So what could you do? Again, this is how millionaires fund their luxury lifestyles, by leveraging the quick and easy access to tax efficient cash to fund their lifestyles, whether it be quick response to investment opportunities that allow them to grow their wealth, or whether it's just being able to have the flexibility and minimize the impact of taxes. You don't have to worry about repayments. Policy loans are typically unstructured, meaning that you determine your repayment terms. What I would encourage you to do, of course, would be definitely to pay the interest every year to avoid capitalization of that interest. This is how you can use your life insurance policy to fund your life, whether it be buying your first car, whether it be funding your kids' education or your education, whether it be pursuing investment opportunities, whether it be funding your vacation. You are able to create an asset that you can leverage, that you can access to fund your lifestyle, to improve your quality of life, to enable you to pursue opportunities that you can use to build wealth, to create that legacy for yourself and your loved ones. So this is just a brief insight as to how you can use your permanent life insurance policy with a cash value component for living. Thank you for listening, and I hope this was helpful.